Hey folks, Dan Frio here, the rate update. Today is January 13th, 2021. The bond market continues to rally, driving down rates. Don't go away. I'm going to go through a detailed description of what's happening in the markets next. Okay, we have a lot to unpack, so I'm going to get right to it. What's happening today in the MBS market? We love it. We love it. There was overreaction. Go back to my previous videos, and I was calling for a turnaround when we hit down in here, that we should be coming back into this range and then up to in this range here. And we're getting there fairly quick. So within 2 days, we're having a nice reversal. Some good news that came in right now is the CPI, or some of the inflation indexes came back, and they are good. There's no heating up of the economy. What I want to go over are some of the things that I watch on a daily basis. I'm not going to go in through it thoroughly with you guys. I just want to show you all the data that I consume on a daily basis before I do these videos. So, but just to recap, the MBSs are up 23. What that means, what does that really mean in the markets? Well, up is good. Up in any bond market, especially the mortgage-backed securities market, means prices are going up, pushing down rates or yields. Okay, so the mortgage-backed securities market is doing very well. A nice good reversal, though, that we've seen is here. The 10-year treasuries are starting to drop. Okay, so what's this? The yields were getting a little bit robust in the treasuries. There was pushing money into treasuries instead of the mortgage-backed securities market. But there's been a reversal, and now the MBSs are coming back in track on where we should be trading. Okay, so that's what's going on right now. But some of the data that I consume, here's what I consume on a daily basis, just not to overwhelm you, but I don't reiterate this stuff to you, but this is how I consume my data. Black Knight is a huge investment company that we follow. And they're basically showing us what's going on with the different yields, pricing on the bonds, and so forth. So this is just a small caption of what I go over on a daily basis. And then you go down through here, there's some economic data that comes in, and then other reports that I watch or monitor on a daily basis. Some good news that's coming in right here is the Federal Reserve Chairman Powell is speaking on Thursday. I think they're going to come back and say, you know what, inflation's in check, the economy's terrible, COVID 3 or 4 or 5's turning around and causing havoc in the market. The vaccines are slow to get out there, so there's going to be a lengthy bad time ahead. What's happening today, the whole day, we kind of came out of the gate and things got better and better and better throughout the day. We had a little pullback here, and then we recovered. I think there was profit taking here, and then we had a recovery. Economic calendar, like I said, the CPI came in right in line with expectations. So that was a number that we were highly following. The US dollar is strengthening a little bit today. That's good for the dollar, good for your purchasing power, but that's bad for other investments, such as one of the hot items out there right now is cryptocurrency, or otherwise known as, or I'll say Bitcoin, otherwise known as cryptocurrency. So that's what's going on in that market. Treasury yields are down over the year, down substantially, but they're up over the past month, and that's where we saw, a lot of these numbers coming in. And let's look at the chart on the 10-year Treasury. You can see how that spiked. Look at the correlation that we see here versus the MBS market. Back on, let me see if I can gauge the dates, right around January 4th or 5th. Look at this move. And that's a substantial move, folks. So then you also come back to here, show the chart, and again around the 4th, and I'll show you that number right here, same time period. Oops. We had this reversal. So it's kind of a flip-flop chart. So we're liking this being down, and this is way up. So we like that. So that shows you other things in that market. All right, so let's dig in on where I expect mortgage rates to get to. and we're going to dive into this section right here. What happens is the Federal Reserve came in months and months and months ago, almost a year ago, and they're like, we need to stabilize these markets because what happened, let's go back when the pandemic hit. Look at this number. And again, guys, remember, when the price goes down, rates go up. That is one heck of a spike in basically a week-long time frame. And then we recovered. And I didn't knee-jerk here because it was overblown. Nor did we knee-jerk here because I was saying, hold tight, guys. I'm not locking anybody because we should find equilibrium basically at around the 25 and 50-day moving average, which correlates right here. You can see those two lines are correlating right there. We should be getting back to that range. Some of the things that are going to kind of halt some of the things that are going on that should, in a normal market, that should happen. What are we seeing coming up right now? Well, we see the Washington D.C. in complete turmoil. Half the people are saying, get rid of Trump instantaneously, and the others like, he's got a week left. Let's just run its course. Okay, so that's one piece of the equation. The next piece is the Democrats took the presidency, the House, and the Senate, so they have control almost everywhere. So they're going to start pumping more and more and more stimulus into the equation. What's that going to do? It's actually going to there'll be more treasuries issued. So now you have supply that's going to go rampant. We're hoping the Fed steps in and gobbles up some of that excess supply, because if not, when you have excess supply and less demand, it's causing prices to go up. What do we know about bonds and prices? Prices go down, yields go up. So that's what's going on in that market. So the Fed is going to play a huge role in all this. And then we're also looking at, with the Democrats in place, a restructure bill, a revitalization bill to pump millions and billions and trillions of dollars into the economy to help out state governments as well as infrastructure. So the spending is going to get crazy. How do we pay for it? Well, you issue more debt. As you issue more debt, prices go down, yields go up, unless people gobble it up. Time will tell. But my expectations are we should be hitting an equilibrium within the next couple weeks. Now, on the 20th, when President-elect Biden gets put in, we got to watch what the country does. This isn't a political post, so I'm just saying there's a lot of security questions out there. There's a lot of questions on, is there going to be a complete debacle at that event? So that could play some havoc in the markets. But short term, again, we have President Powell, who is the chairman of the Federal Reserve, coming out Thursday and talking and giving us some insight on what the plans are at the Federal Reserve level. That will be a market mover. Hopefully it's in a good way, and that's what I expect, because the economy is in the toilet right now, and the only thing that's hanging on the everything that could hopefully possibly make all this a soft landing is the stimulus bill. So if you like my video, please give me a thumbs up. Help me with the algorithms. I need you to subscribe and click the bell so every time I post a video, you get an alert. If you would also share the video, just share it out there with anybody that you think might be interested in. The new format of the channel is going to be every day I'm going to do the mortgage update, but I'm also going to talk about stocks and bonds and real estate, cryptocurrency. I have a new acronym for all this. It's going to be SCRUB, SCRB, stocks, crypto, real estate, and bonds. And the just behind that is it's basically how you progress through age as well on what you invest in. So start investing in stocks as soon as you can. The next piece of the puzzle is crypto. The millennials love this cryptocurrency. Put some money in that. don't over leverage yourself, but put some money in that, in the cryptocurrency such as Bitcoin and some other places. And I have down in the description where you can go check out how you can sign up and get an account to start monitoring this and investing in that. So that's basically put a little bit of money in there as like a lottery ticket and see what happens with it. Then as you progress through age, you're going to move into real estate. You're going to look at buying your own property. And then as you get older, there's a safe haven that people, as they get older, buy more and more in bonds. And that's think of it as a savings account with higher yields. So SCRUB, SCRB, that's going to be the acronym of what we start talking about. So if you like the channel and you like what you're seeing here, how do you get in touch with me? Well, the best way to do that is go to therateupdate.com. Scroll down to the bottom right here. There's an 800 number, 844-775-LOAN. That's 844-775-5626. Give us a call, please. If you want to email me, if you have a mortgage estimate that you want me to review, get a second opinion. If you're in the process of refinancing or buying a home right now, please get a second opinion by us. Email me your paperwork at D for Dan, Frio, at preferredrate.com. But if you're in the market and you're like, I need to get pre-approved, but I really don't know much about this process, and you're like, I don't want to call because I'm scared, I get high pressure sales. Well, click this button right here. It's going to take you through a funnel, is what we call it. You're going to answer questions, and it's going to route you and me to tell us what the exact program is that we should be putting you into. The green one is if you're looking to refinance. Up through here is like, you know what, Dan, I've been pre-approved, but everything you do and say, I want to deal with you. So click here and apply now and get the ball rolling. If you just want to reach out to us for a quick quote, somebody will reach out to you at the time you specify. Click this button here. And this is a new item we put on a couple weeks ago. If you're a homeowner and you go to Zillow and Trulia and Redfin and all these things, and all the values are different, this is the place to go. It's free to you. I pay for the services. There's no clickbaits. I don't sell your data or anything. It's basically, it'll tell you everything about your house and even things you don't know, which is good. So that's the best way to do that. But other than that, like I said, if you would please just click the subscribe button, share the video, do everything you can to help us out with the algorithms. I'd really appreciate it. Other than that, God bless. I'll see you tomorrow. Bye-bye.